Well, hi guys, it's me, Alex, Dispatch Training Center, and it's been a while since we did our live. I see that we still have some students who are gonna be interacting with us, and please make sure that you guys comment, ask questions, because today is a very important topic for most of the truckers: financing of their equipment. And we're going to be asking questions from our new affiliate program, and we're going to introduce you the person who will be probably processing your application, person who in the future going to hopefully become your friend, and we're going to see, is it really possible to get your truck financed now? Does it make sense? And of course, we're going to be direct, honest. So let me introduce to you Kyle Edwards, and we're going to talk about his company, where he works, and are they good? Maybe good? Oh, they are really good. We're gonna find out. Let's see. Hi, Kyle. How are you?
Good. How are you?
I'm good. Well, welcome. Let's start from the beginning. First, I would love to ask you, why financing? What is your background? How long you've been in the industry? And let's start talking about your company.
Yeah, absolutely. So my background is in financing. I got my education in MBA in financing, and I've been in the trucking industry for about 4 years. Derek's been in the industry for about 8 years. He went straight from high school. I actually got into the industry. I worked at Enterprise Rent a Car as a trainee there. I rented a car to my old boss, and he just hired me in the parking lot, and I got into the industry selling parts for trucks. And when I was there selling parts, I finished my MBA in financing, transferred over to the finance department, and fell in love with it. It was just amazing to help customers get the opportunity to conserve cash flow and help their lives and get the equipment they wanted, so that way they could be successful.
So let's go back first to introducing, guys, your company. So it is a KC Financial. So what does it stands for? KC Financial. Where's the name come from?
Well, my first and last or middle name is Kyle Christopher, and we're
Okay.
also based out of Kansas City, so it's got a duplicate meaning. It means Kansas City Financial or Kyle Christopher Financial.
Okay. So are you the sole owner of this?
No, I have a business partner named Derek Rodriguez. He's the one that's been in the industry for over 7 years, and there he is on the left.
Okay, so look at this cute guys who are trying to give us financing, guys, right? Okay, so it's a two partners. How long, guys, have you have this company for? Like, when did you start?
We started in October of 2021 is when we founded this business. And in our first year, we had quite a bit of success, and now we're just taking the ground by storm. It's been an amazing year so far, and we're just very excited to keep helping people.
Okay, so both of you were working for somebody else in financing, or you just kind of knew each other? Are you friends? May I ask you, are you guys friends, or you just
We we met at work, so we are friends now, but we met as colleagues. Correct.
okay?
So,
So
but
one night you go to the beer, you drink, eating that good steak in Kansas City, and like, guy, well, 2021 market is great. Everybody's
yeah,
buying trucks, and you're like, wow, should we keep working for somebody else, or should we start something new? Right? Is that how it
exactly.
went?
Yeah, we weren't really eating steak at the time, but we live very active lifestyles, and we're like, let's go play frisbee golf. And this idea came from us playing frisbee golf outside.
Okay. How easy it is to start a company which will be financing equipment?
It's very challenging. There's a lot of requirements and things you need to meet to be able to work with certain lenders. There's a lot of requirements, auditing and background reports and checks for pulling customers' credit and having certain things in place to make sure you're protected and the clients are protected. So I wouldn't say it's easy. I mean, it's easy to form an LLC, but it's not easy to become a finance company and be successful at that, because you have to have access to a lot of different repertoires for customer, because each customer has a different credit profile, and each lender is going to have that profile that meets that customer's credit box. And to be able to work with these lenders and have the opportunity for success for these customers is very difficult.
So let's talk about financial part. How much money do you need to have to start something like this? Because maybe, let's be honest, trucking is going through the harsh time. Dispatching is stressful. Maybe I'm gonna go and also open financial company. So how much money do I need to have to start something like this? And we're honest here. We're not digging through your financials, but give me approximately the number.
You could start an LLC and become a finance company, and then forming an LLC can be $25 off a Rocket Lawyer. So it just depends on how much you want to put into it and what you want out of your business and how you want to be successful.
So let me ask you this. Your previous employment experience, did it help you to get to those lenders? Because as you said, it's the same as opening trucking company. $300 to file MC, get insurance, you a trucking company. But to run business, you have to have lots of knowledge. So did your previous experience help you to kind of survive and become finally financial company who has those connections?
So my previous financial experience definitely helped me learn the industry, the intricacies of finance, the gray areas for customers and stuff like that. But when it comes to lender relationships, I came from the dealership side, and the financial brokerage side is completely different. You work with different areas of banks, you work with different people. And so a lot of the success we've earned those relationships by providing metrics and fundamentals that we follow, and the ability to send them business and the ability to help their customers. And anytime a customer has an issue, whether that title didn't get shipped for 3 weeks, we're there to help them, because it's not just a deal, that's our customer too. And we want that relationship.
Are there any training that banks are provide? For example, maybe they do like, if you want to work with us, first you need to take the webinars, seminars. You need to prove that you guys can cover this kind of transaction in the honest manner. Does it exist like this in the industry? Or it's like trucking, fake it until you make it, or it's your luck, or it's your sales experience?
No, there's definitely webinars every month. I still have lenders that I work with send me webinars. We have to take tests every year for auditing purposes to make sure we can run credit. There's so many different things that we do every day, and we go into those meetings, we accept those meetings. We want to learn more. Market changes every day, and programs change every day with lenders, and so you have to stay on top of those meetings and take those, because if not, your knowledge is going to be in the past. You're not going to be relevant in today's day.
So you seem like a very intelligent guy who came from not an easy background. You were not born with money, right? Because we were chatting with you a few minutes before the live. So do you strongly recommend for the younger generation, for people who come to trucking on different levels, that education and knowledge is a must?
Education and knowledge is a must in trucking, because trucking is so easy to get into, but so difficult to be successful. I mean, anyone could go get a CDL, take tests, and like, oh, I'm going to run my own trucking company. But you have to be set up for success. You have to have load boards. You have to have, you got to have a load to make money. And if you don't make money, you can't pay for your truck. And it's a very hard industry to get in. And I would say having a knowledge, or if you grew up in that lifestyle, having like a dad or a mom that drove, like, it's very helpful to have a background of trucking, because you can't just come in and be successful. I'm sure some people can, but there's a lot of horror stories out there, and it's because people just jump right in. Oh, the market's good, freight rates are good, let's just get in. Let's go buy a truck that's $20,000 above asking price, and then they just get upside down. And it's not. You just got to have some knowledge. That's
And you have been born in USA. Can you just verify to me, do you believe that actually we lack financial education starting from school, high school, like educating people to correct financial freedom and how to run businesses? Well, America is great opportunity. You can go, like you said, open a corporation, open LLC. You go to the bank, and usually you will still get financing. But do you think that we really need to kind of start educating people before they jump in all these ideas? Not even trucking, but anything. Like, as an American, because again, I grew up in Ukraine, so I come from different background. So what do you think? Do you think that a general public, and let's talk about age, because people who come to trucking from 25 to, let's say, 45, do you think that they lack the knowledge of actually financial calculations, profit and loss, simple accounting?
I think people have strong areas, and then there's people who have weaknesses. I wouldn't say people lack the knowledge, they just haven't learned it yet. So, just for example, I think high school should teach a tax class. Especially if you're going to start your own business, you need to know how to do your taxes. And half of the battle of being successful is keeping your money and making sure that you do proper write-offs, and you buy accordingly to make sure you maximize your return. And I think that's a must. And then when it comes after that to your financial security and how you want to finance a truck versus what you should do, I mean that tax class is going to help you a lot with that, because the asset's a depreciating asset.
Okay.
And so I think we should start with that. And if every high school or every first year college student learn something about taxes and had a tax law class, I think that would be beneficial, especially not even just in trucking, in any industry.
In any industry. Well, let's go back to our big dream, because most people who watching, or they already had a truck and they're looking to buy a truck, or they're trying to get rid of the truck because they cannot make the payments nowadays, or they just simply don't know how to start so they can become that mega carrier. So let's go back to something that you know very well, and we're gonna kind of pick on your knowledge. So first, the question which everybody's asking, well, is it a good idea to finance a semi truck, right? Because a lot of people listening to their friends and they say, well, just keep saving the money. When you get that cash, go and buy it in cash. So let's talk about this. What are the pros and cons of buying truck for cash? Because and first, let's be realistic. We're not talking. When I bought my first truck in 2014, they used to be, oh my god, 110,000 with extended warranty, brand new truck, right? Now we're talking about what? Brand new truck is what, 220, 215 in the
A couple
pan.
months ago, 220, 215.
Yeah,
Now probably 180 to 200.
yeah, but still, now we're talking about with taxes, with everything, extended warranty. Let's say it 190,000. It's a big chunk of cash which you need to save. And what I've been seeing, people don't really have it. They go and start borrowing from mom, from dad, from sister, from brother, because they say, I don't want to have payment. So let's kill this myth right now. So you in the beginning, you want to buy the truck. Is it good idea to give that cash away, or it's kind of not a smart way of starting trucking?
If you have an abundance of cash and you're just going to run one truck for the rest of your life, it might be a good idea to buy it in cash. But if you want to have a successful business and grow and keep cash liquidity on hand and continue to pay your insurance premiums, pay for your fuel to book your loads and stuff like that, it's definitely a good idea to finance, because not only does that financing give you the availability to have that cash on hand, it also gives you the ability to grow. Because once you have 12 months of pay history on your loan, whether it's a lease purchase or a simple finance loan, and even if those lease purchases aren't reported anywhere, you can still get credit references from those lenders and those banks, and they're happy to do that for these customers. And that gives you the ability to borrow at a lower rate, a lower cost, better truck, newer truck, and your payments are going to be lower because your rates are lower. Your interest is going to be cheaper because this is your second truck. Your insurance is going to be cheaper as long as there's no accidents. It's just financing a semi truck right out the gate is the best opportunity to help you grow your business in the future.
Okay.
If you buy it in cash, you're stuck in a rut. You're in the same position you're going to be in 5 years from now if you only buy in cash.
Yeah. Plus depreciation. So if you suddenly need the cash for some emergency happens, life happen, or maybe you decide to buy another truck, you put all your cash in one truck. So depreciation, the moment you turn that key and you drive from that parking lot, right? What is the depreciation? Probably what, 20, 25 grand right away. You go on the road, within a year, you put 100,000 if you are really OTR driver. So unfortunately, yes, it seems like you don't have a payment, but also what if you have even new trucks? Even if you pay cash, they still have breakdowns. You still have to buy trailer or deal with maybe, I don't know, claims or anything else. So we figure out it's not a good idea. Well, we also want to make sure that people understand. So what is a good score, credit score, to buy a semi truck? Is that different than to buy a personal car? First, because we talk about difference in price, right? Well, you can go buy a car probably for what, 40,000 now, plus minus, but the truck starts already with 185. Is there bank looking at the different scoring for the semi trucks? Because now we're talking about business equipment. We're talking about commercial trucks. So is there a difference? How do the bank looks at it?
Yeah, there's absolutely a difference. A semi truck is a way riskier purchase than a personal car, not only for the fact that you have to book loads to pay for the truck, but the risk on the road. Trucks are huge moving pieces of equipment, and there's risk associated with lenders, especially if like an insurance policy falls and that truck gets in an accident. That lender's held liable for that cost, especially if the customer doesn't want to fork over the money if they don't have the cash. So yeah, it's completely different, to answer your question. And every lender has their own credit box and credit criteria. So any customer can get approved, most likely.
So let me ask you this. How many lenders are you working with?
We personally have about 30 lenders on hand, and then we have another partnership in place that has access to 15 to 20 lenders that we can't work with yet because we don't have the time and business. So we have access to 45 to 60 lenders in the industry right now.
So let's look at your promises. Well, first you say equipment age, no restrictions. Does it mean that if I find a truck which is 2007 and I still want to finance it, you're gonna finance it?
Yeah, I financed a 1997 earlier last year, but it was a dump truck. It wasn't an over-the-road sleeper. But yes, there's limitations. I shouldn't say there's no restrictions, but there's a lot of gray area with equipment that we can get done.
So when we're talking about those older trucks, before you guys finance them, before you guys give any, do you guys actually send them for like evaluation or mechanical check or inspection, or you guys don't really do that?
Most of these trucks will be either inspected by the lender. The lender want to inspect them, make sure they're good to go before they lend money on them. Or if they're at a dealership, the dealership already done their inspection, run them through the shop, got them all detailed, ready to go. So it just depends on the piece of equipment, but there's always some type of inspection done by the lender to make sure that they're lending on a piece of equipment that's not a lemon or that's not working. Because if it's got an oil leak and it's just spewing oil, the lender's not going to lend on that because they're going to want to see clean ECM with no issues.
Okay, let's look at the mileage. So you say also no restrictions, but of course, if it's under 750K, it's easier. Well, credit. You even promise if I have a credit score of 500, you're going to be able to finance me. So look me in the eye, Kyle. What is going to be my rate? I know you can finance, but what is that rate gonna look like nowadays?
On a customer that we've financed a customer that had a 400 something credit score. They just had a bad start at it. They're trying to get back on their feet, and the lender put them in the lease purchase program. And the truck was older, it was cheaper, it was affordable for the customer. And at the end of the lease, they could either take their down payment back or take the truck. Kind of works as like an apartment. They didn't disclose rates. They don't disclose rates on those lease purchases. They just kind of say, hey, this is what the customer's payment is, or can they afford that or can they not afford it?
Well, come on. You are a finance guy. You know how to calculate their rate. Don't give me that. You don't know. You know their payment. You know how much equipment was. You know how much down payment. Simple math. You can calculate. So let's just throw the realistic number.
I can calculate any rate given to me by just the payment and the down payment and the finance amount.
Exactly. So that's why approximately what it is. It is under 20. Is it over 20? Well, we're not playing games here. You decided to come and be affiliate. You have to be honest. So
these lenders are taking a risk, so it's over 20%.
So it's over 20%. Okay. Yep. So guys, see, anything in life is possible. It's always about how much you're gonna pay for your stuff, for your equipment, for your pleasures, right? So here's an honest question. You have to be realistic. Can you afford it? Well, sometimes, like he said, sometimes life happens. People file bankruptcy. People have to start all over. Sometimes you have to take a second risk. And yes, you pay the price. But let me ask you this. After they're going to decide, lease purchase, let's say they're going to keep it. In 2 years, in 1 year, is that going to help them to get maybe better interest for the second truck or maybe grow? So is this process doesn't even make sense? Like, because people, when they look at the numbers, they're gonna say, well, Kyle, come on, I know you try to help us, but you kind of robbing us. So what is your speech there for the future?
My speech for the future is, if you have 12 timely payments, or even if you paid that truck off because you had a great start on your comeback, you're definitely going to be well below that interest rate you got on that first truck, because they're going to trust you. Lenders are going to see your pay history and commercial credit now. And your personal credit score is going to probably go up at that time if you're, focused on building your commercial credit. I'm sure you're handling your personal affairs as well. So that first truck it's gonna hit you in the teeth. It's gonna suck, but you're gonna make some money. You're gonna get back on your feet, and then that second truck's really gonna benefit you and help you grow. And then
So
after that, it's just
So 12 months, that's enough to finally kind of start going that business credit, getting better rates, getting better. So 12 months, or is it actually 2 years? What
12 months of pay history is what most lenders look at. I can't say that for all lenders, but majority of lenders want to see 12 months of pay history. As long as there's no exposure issues, as long as his customers' bank statements prove that they can afford a second truck, if they want to keep that first truck after 12 payments and they're still paying on it, that sets them up for, a better opportunity on that second unit, whether it's 12 months or 36 months.
And here is a trick question. So I got it. I pay in 12 months. I want to get the second truck, right? But we ain't trucking. And let's be honest, you probably see those tax returns. You probably see how we pay taxes. And we don't really pay taxes the way we should pay taxes. Everything is write-off. Everything is depreciation, especially in this market. Is there gonna be a actually problem if your company shows that they are barely making it, although they're making money? You know what I'm talking about, right? We're in trucking, especially in Chicagoland. So most of the people write off on the house, on the personal stuff. So in the end of the year, you get their tax return, like, okay, how did you even able to pay this? Is that a real problem when people come and fill out that application? Do you ask them for tax returns? For how many years? Is that only personal or business? Or maybe you guys have magical lenders who don't care.
Typically, standard, they require 2 years tax returns. Majority of owner operators will file their taxes together, business and personal, at the same time. So we won't need both. It's typically just under one tax return. Mm-hmm. And if they're showing a loss, the lender's going to ask, like, hey, what's going on? What's happening? And be like, oh, he depreciated 2 trucks this year, and he didn't have the year he thought he was going to have. And that's an acceptable answer. And if they're comfortable lending on that, they're going to lend on that. And so even having a loss in your taxes isn't going to decline you from getting financing. We all know the game. We all try to, keep as much money in our pockets as possible. And that's how you have a successful business. And so it's a red flag if it's 2 or 3 years in a row and they don't have any trucks. Then maybe, in their fleet, maybe that's an issue. But if it's solely they depreciated more assets than they wanted to that year, then that's not going to deter too many people.
Okay, so before you're gonna submit all the applications and get all those hard inquiries, do you realistically look at every client as a separate case and you actually talk to them first? Or you just go and you start submitting and you just hope, well, somebody's gonna do it? Or you actually trying to be honest and tell them maybe it's not gonna happen and you have to wait, or you need to increase your down payment, or maybe you need to improve a little bit of your history, or you just people who just guys go and hope for those, casino bits, huh? Somebody's gonna bite. You have 40 lenders, somebody in a good mood today, boom, approve. Or are you trying to do the honest business?
I am so proud of the way we do business. We get referrals on a daily basis from customers that had a great, opportunity with us and they enjoyed working with us. And Derek and I have done this enough to know we can look at a customer's credit and know exactly which lender to use to maximize their, credit profile, get them the best rate that they're going to get, the best down payments to keep the cash flow on hand. And majority lenders nowadays are soft inquiries anyway. But if there's one, we're going to KC Financial is going to be 1 to 2 credit inquiries. Okay. We don't shop your credit around. We look at your credit profile. We'll have a conversation with you. And if we're torn between 2 different lenders that are going to give you similar terms, one might have a higher rate, one might have a higher down payment, we're going to call you and say, hey, which one do you prefer? Which one, are you going to, would be help you be more successful with this truck, blah, blah, and then we send it to that bank. We don't shotgun credit. And that's how we've been successful and keep, client retention and help these customers.
Okay. So realistically, what is the rate nowadays for the used equipment? We're not talking about new equipment, somebody who can put down what are usually requirements. Let's say we're talking about 650 to 750 score. They can prove you tax returns. What nowadays the rates are for commercial trucks for the financing? Realistic ones, not just we could get, well, in a perfect scenario. Let's talk about majority of cases.
Is this like a first time buyer startup,
Yeah,
or is this like a
we talk about first time buyer because if people have been buying, they already go and they finance directly with a Daimler, they go finance directly with a dealer. So we're not talking about mega cars. We're talking about guys who buy maybe one, two trucks, maybe even their first truck. So the small carriers, the biggest actually numbers which need to survive this market. So we're talking about this general guy been in business for 2-3 years, finally getting his first or second truck.
it's depending on his bank statements and his personal credit, it's going to range from 13 to 18% on average.
So it's
Lenders are borrowing funds near the 8 to 7% range right now. This is a rate for a piece of equipment, a yellow iron. We do, equipment loans as well, and so the rates for those are a little lower because there's less risk for the lender.
okay.
With,
Okay.
and there's the standard first time buyers typically going to be 25% down payment as well.
Okay. And here you guys ask for the processing. So first you need your credit application, right? So this is simple. Everybody asks that. Then you need to have the purchase order, CDL or driver license. Let me ask you this. What if I own company, I do not have CDL, but I am planning to put a driver on my truck because I'm a business person. Is that going to affect my financing because I do not have CDL or not?
There's certain lenders you won't qualify for since you don't have a CDL, but we have so many lending options and we're set up to help customers be successful that we're still going to get them the same rate. We're just going to use a different lender. I financed 10 or 15, investor deals is what we call them if they don't have a CDL, because they're just going to put a driver in the truck. They have extra money. They want to get into trucking. I've financed 10 to 15 trucks or customers alone just this month so far in that same criteria. So that doesn't disqualify you. And the way we have it set up, we're going to get you very similar rates, if not the same rate as a CDL holder with the same credit score.
Okay. Also, you asking for 3 months of the bank statement and 1 or 2 years of the tax return. We kind of already touch up on that. So then we already talk about what is this, your second chance program. So this is for people with credit score under 600. And we kind of covered that, right? So if they are able to come up with a strong down payment, let me ask you this. Are you going to be verifying where the down payment comes from? Because I can go and borrow from my 5 sisters, 10 brothers, and come up with 30,000, 40,000. Are you going to verify where the down payment's going to come, since already my score showing that it's kind of lower, so my credit is not stable, does not show that I'm financially responsible person, or it doesn't matter? Can I just bring you pennies and coins to your office and say, here you go, 50 grand, my down payment?
We don't have a physical dealership location that we work at, so we wouldn't be able to accept cash on hand.
That was a joke.
But majority of the time the lenders are going to require verified funds. There are opportunities for customers that, hey, I have 40K in my mattress, that lenders are going to be like, okay, cool. Like, we understand some people don't want to use banks. So there's opportunity for those customers as well. But majority of the time, verified funds are the way that the lenders are going to want it paid.
Okay, so if we would give suggestion for people who still have, hopefully, some cash under the mattress, is it a good time to go and start depositing so they can prove that money been there maybe for 3, 4, 5 months, right? Because they wanted what? On the previous slide, I think you want 3 months of bank statement. Would that be a good advice if they're planning maybe to buy truck in September to kind of start putting deposits on that account?
Absolutely. If their plan is to buy a piece of equipment in the next 3 to 4 months, that would be the best, to have good ending balances and a cash reserve to show the lender you have verified funds. With the US dollar going down in today's market, I'm not going to suggest anything to anyone, but it's probably a good idea if you're going to buy a piece of equipment, the lenders want to see that in their bank statements.
Okay, sounds good. So equipment you guys finance. So look at this. You do anything like semi trucks, you do slippers, day cab, whatever, pre-emission. You do any trailers, when reefer, flatbed, even dump truck. You were talking about the older dump truck. All of this equipment, uh, any equipment I want to find. What if I want to buy a little sprinters or little, I don't know, some I don't know.
Yeah, we do sprinter vans. We have opportunities for forklifts. We can do boat trailers. We don't do boats. And we have lenders that will even do, health equipment like stuff for a hospital. We specialize in the equipment realm, so we stay there because that's where we maximize our customers' return and
Okay.
help them.
So as we see, they do everything. So let's go through a few of definitions, because then we're gonna go actually to the questions, because I've seen that people been posting the questions, so we're gonna answer them. But let's just really go in a little definition. So what is EFA? Why people need to understand the difference? And the next one, we're gonna talk about lease purchase, and of course simple interest definition. Why people need to understand the difference, and should they, or should they just trust your opinion and you're gonna suggest them what is the best route for them?
I'm always going to suggest the best route, but if I was in their shoes, I would always get to the bottom of the definition and see how the loan's structured, how it works, so that way I know what I'm locking myself into. An EFA is sold as, oh, it's a loan, you pay it off, it's 36 monthly payments, and after you make your 36 monthly payments, you're done. But in reality, it's similar to a lease program. If you are in an EFA, you have 36 payments, and if you want to pay off early, let's say you're on payment 12, you have to pay 24 payments. Even if that's all at one time, you have to pay 24 concurrent payments. Whereas like a simple interest loan, you don't have to do that. You just pay your principal balance. So an EFA is a loan. It's not a lease. You own the piece of equipment. That's the difference between an EFA and a lease purchase. But you're still locked into those payments for the life of the loan. Some lenders, if you're a good customer of theirs, or if you're going to buy again, they'll give you a discount to pay off early. But majority of the time, you're just paying those monthly payments, whether it's you pay it off in 13 months or 36 months, you're still making 36 concurrent payments with all that interest built in.
So then why would I ever consider EFA if I should just take the simple interest loan? Or is that because sometimes people do not qualify for the simple interest loan?
There's a lot of risk with a simple interest loan because you're giving the customer the opportunity to pay off early whenever they want. And some of these lenders, they pay referral fees to get deals. They borrow their funds at 9% and they sell it back to the customer at 9.9%. So they're not even going to make that much. And if the customer pays off early, they're not going to make enough money on that loan.
So let's just be honest, it's not enough business for them to give you the simple interest loan, because everybody needs to make money, right? Is that the truth? Because it's risky. It's a kind of a higher risk of people maybe going out of trucking. So in the end of the day, probably everybody has to make money, right?
Correct.
So is
And
that you're gonna decide, or most of the lenders are gonna tell you, well, we can do this, but the only way we're gonna do it if it's going to be this first option, EFA?
We'll discuss with the customer on a case-to-case basis what they're comfortable with, and sometimes in EFA the lender will give a lower rate to a customer because they know they're locked in for those payments. And so if the customer is very rate sensitive, they're like, I don't care if I got to make 36 payments, I just want this rate. That's a great opportunity for them to get the rate that they're looking for, or at least the opportunity to have that rate.
So usually it's only 36 months. It cannot go longer than 36 months, because 36
No,
months.
I mean, there's 60-month EFAs, there's 72-month EFAs, there's 12 months. It just depends on the customer and the piece of equipment. I was just using it as an example.
So, okay, if I comfortable with paying this truck for 5 years, 60 months, but I want to have probably a little bit lower interest, I can look into this, but I just have to remember I cannot pay it off early. I still have to make all of this, so I cannot change my mind later, right?
You can pay it off early is what they tell you, but you're still locked into those payments. And it's just a sum of those payments.
What do you mean by locked in? I mean, okay, so if I know that I have 24 payments left, let's say each of them is 2,000, so
the day you pay off, you're paying 48 grand.
so 48 grand. But if I would be, for example, in a simple loan, whatever day I want to pay off, they're gonna recalculate, and of course it's gonna be a little bit less because I am paying off, so the interest is not a kind of okay. But
Correct.
for some people, well, I mean, at least, I mean, I was under impression that you have to pay extra penalties. Are there extra penalties? Are there going to be extra surcharge on top of, let's say, those 2,000 for the next 24 months?
Not on an EFA.
Not
On
on
a
a.
simple interest loan, there are principal balance penalties.
Okay. Here we have a questions: lease or finance. So what does it mean? I mean, I think people get confused. So let's clarify this. We have lease equipment, right? And people can even come to me as a trucking company and I can give them lease option, right? I can say, well, you pay me 1,500 a week, you pay me an extra 12 cents per mile for maintenance, you lease whatever agreement I have, maybe for 2 years, maybe for 1 year, when market was going up and everybody wanted to drive, well, 6 months, months to months. So I can even do it as a trucking company. So this is a lease. Whatever. If we break the rules, I'm taking my truck or I start. What is the difference between lease purchase?
So a lease is kind of like a rental. You go to a rider, you rent a truck for a month, you pay weekly payments until you don't want to have that truck anymore. A lease purchase is the lender owns that truck under their name, but it's your truck to go do what you want with. There's no mileage fees. You can put however many miles you want on the truck for most purposes. And at the end of that lease purchase, it's like, oh, hey, the $24,000 that you put down on this truck originally was technically a deposit. If you want to keep that 24 grand, you can give us the truck back. Or if you just want us to incorporate that as like a down payment, the truck's yours. And so the lease purchase gives the customer the opportunity to do whatever they want with their truck, as long as they're not doing like a straw purchase where that means they're subleasing it to someone else. Some contracts will have it in place where they can't do that. But it's not like, hey, you owe us a certain amount. It's only 2 or 3 months. These lease purchases give these customers the opportunity to have lower payments per month. They space it out 36 to 60 months, sometimes 72. And, they have that cash flow on hand. They do low down payments on some. Some of them are higher down payments for those second chance options. And the truck's yours. It's just not in your name until you pay it off.
Okay. So again, question is, and I think that we have Everly more, so what is it better? To have the lease or to actually finance truck nowadays? And what she's asking, not lease purchase, but leasing truck. So what do you think as a finance professional in trucking? Because, with market going down, it's not stable market. I can tell you as a dispatcher, as an insurance. So what do you think? Is financing truck, whatever option you can choose, is it better idea than leasing? It all depends on the person and their goals and how
Yeah,
they.
it depends on how long they want to be in the industry. If they just want to give it a try for a couple months, go do a lease or a rental with Ryder or Penske. If you think you're going to be successful and you want to, be in the industry for 36, 56 months or whatever, a lease purchase is the best option because your payments are lower per month. People are like, oh, I'm paying $1,000 a week to have this truck. Well, your payment's probably going to be about $1,500 to $1,800 a month. That saves you on cash flow and everything like that. So it just depends on the timeline and how long you want to be in the industry. If you want to just try it out, go do a rental or a lease just to see if you enjoy it.
Okay, sounds good. So what other advices can you give for newbies? Let's say people are coming to business right now, right? Tough market, lots of volume went down. We don't know what's going to happen nowadays with the freight volume, with the dollar losing their strength. I mean, we have to have a crystal ball. I mean, you're in finance, maybe you know insights better than me, but would you suggest people to go and look for the used equipment because prices went down, or should they still consider to buying that brand new trucks? What do you think?
If you're in a simple interest loan, if you're going to get the truck values are good right now. So if you're going to go get a cheaper unit or a brand new truck, the price of these units are, very competitive right now. So if you get a higher rate because the Fed rate increases over the last year, you can refinance that if you're in a simple interest loan. If you're not in a simple interest loan, then I would advise, if you're happy with the rate that you're going to get, go ahead and do that. and the market, the equipment's cheap right now. I say cheap, it's probably going to go down a little bit more here still, but it's affordable compared to what it was a year ago. If you're in a simple interest loan, like if you're buying a home right now, your rates are probably 6 to 7%. A year ago, they were 3%. But when those rates come back down, since it's a simple interest loan, you can refinance at that lower rate just on that principal balance. And so it just depends on what kind of loan the structure you have on your loan and what you're comfortable with.
Okay. Do you guys also help with equipment searches and finding the right equipment? Do you have the contacts maybe for the bigger mega carriers? I don't know, those prime, other logistics who usually what they do, they sell their equipment. Do you guys help? For example, I come to you and say, you know what, Kyle, I really would like to buy, but I've been looking around. I went to see this truck, this, and it's too many miles, not in a good condition. So if I tell you, well, I want to buy a truck and a trailer, can you help actually client to locate? Because I mean, USA is big. Maybe somebody in Kansas and equipment is somewhere in Virginia, or I don't know, maybe Florida. Do you guys help with that, or people have to find their own piece of equipment and then you take over?
No, we absolutely help. We have a lot of dealership relationships. We just bought a wholesale 20 trucks through a dealership partner of ours from Swift, a huge carrier. We got the trucks, they're spec'd well, they're taken care of because Swift takes care of their trucks, and the mileage is low. And we got them at such a good deal that we were able to give these customers a good deal back on them because we have that partnership in place. We have a lot of dealerships across the country. We have California dealerships we work with, Texas, Tennessee, North Carolina, and then just one of our bigger customers in Florida. We actually just sold some of their trucks for them to some of our other customers because we trust that their trucks are good. We know they take care of their fleet. So we can also help bigger customers sell their trucks to, these individuals that need a better price truck. And, this big customer is like, oh, I just want to get rid of these. Like I already depreciated them. I'm on to the next cycle of my depreciation. And we absolutely can help source that. And we help a lot of customers find equipment on a daily basis. Even if we don't finance it, we're trying to help them get a better price on their truck.
So let me ask you this. Maybe we have a person who thought that trucking is, really easy business, or maybe did underestimate what was going on with a market going on. Let's say somebody's sitting there with 4 or 5 trucks, cannot find the drivers, and understand that, yeah, he has to lose. Let's say maybe person paid in cash, right? If they reach out to you, like you said, you have customers, is there can be deal done that you help them to sell? Of course you have to make money on it, but is there a possibility of that kind of deal going on through KC Financial? If somebody has equipment which is paid off, you have no liens on it, paid in cash, but people don't want to wait till another year, find a driver, or for market to change. Well, they made their own decision, they're gonna lose money. Do you help somebody like that?
Absolutely. We had a customer that was filing bankruptcy that needed to get rid of 5 units, and they were priced well, and we had the dealership pick them up. And then we were able to run them through the shop, clean them up, and make sure that they were good to go for the next customer.
Okay. So I guess you're not just financing, but you can help people to grow, or you can kind of like, in a real estate we say downsize, right?
Yeah, absolutely.
Kind of get rid of things which they cannot afford, or because things happen in the truck and they were not prepared for. Okay. Well, let's see. Here's a question from one of my previous students, and he's a driver. So he says, I got my truck finance in my personal credit. If I upscale up, can I get one in my business name, and what do you all look for? So the first one is a personal credit. Is that going to help him to get a next one on his business name?
It entirely depends. If we have a customer that went to his personal bank and that personal bank's not reporting that anywhere, we have to reach out for a credit reference, and we'll proactively do that to help these customers. But if he got it under one of these equipment lenders that report, it's going to be under his personal name, and he's going to personally guarantee under his business name, so the two will connect and lenders will see that. So yes, that'll help him upscale 100%.
Okay.
As long as the pay history is, good on it.
Okay. And another question is there always a prepaid penalty, or it all depends on the lender and the type of the loan?
It depends fully on the lender and type of the loan. Even on simple interest loans, there's a lot of prepayment penalties, but they're very small. Like if you owe 30 grand and you want to pay it off early, some of these people will have 1 to 2% payment penalties on that 30 grand, which is $600. Okay. So at the end of the day, if you pay it off early, that $600 is a prepayment fee, but at least you're not locked into that loan for the duration of it.
Okay, sounds good. And let's go back to your site and just we're gonna ask a few more questions and we're gonna let you go to enjoy the rest of the night. So, how long does it take to get pre-approved? Let's say I got you all the information, I gave you the application, I know my equipment. In general, how long does it take to get pre-approved?
If we have the application, the unit they're trying to purchase, their driver's license, and 3 months of bank statements, and we get that 9, 10 in the morning, we'll have an answer before the end of the day. If they send us, a credit application, we look at their credit, they're kind of in a gray area between a couple lenders. One's a better rate, one's not. We might ask for additional information. If we don't get that additional information, then it's going to be a longer process. Sometimes the customer submits everything to us, and it's that gray area where we're trying to get them the best rate, and that could take up to 24 to 48 hours. So
what is the average down payment for the loan amount? I can tell you this, in 2014, 15, 16, when I was buying my trucks from Daimler, I was only given $1,000. That was the lowest down payment I ever had to put on anything in my life. Does that even exist nowadays? Even with a great credit score, can somebody go and put only $1,000 or few $1,000s and get financed?
we have a few customers that are pretty big fleets, and they're still getting zero down approvals. Some lenders have tightened up, and now we're trying to get 5% down where they're used to 0% down with that same exact lender. So it depends on the customer. On average, a first-time buyer, second-time buyer, it's 10 to 20%. Majority of the time, 20, 25% if it's first-time buyer.
Okay. And of course, which credit bureaus do you guys pull? You said that you do what?
Experian, Equifax, and TransUnion. We pull Experian, and a lot of the lenders we work with pull Experian as well. Some will pull TransUnion. It's very rare to have Equifax.
Okay. And we already went through this. Okay. People do not understand that sometimes after you do all this, do they have to buy insurance before you can finish that kind of deal? Because a lot of people think, well, I'm just going to buy. Do you need a certificate of insurance? Because they still have the loan and they have to make sure that it's covered. And if they don't have their own MC, do you need to verify which attorneys they're going to be working under? Or that's something which the banks do not care?
If you don't have an insurance policy and your lender doesn't require that for your state, you don't need it. That's a thing. 99% of the time, you need an insurance certificate. So if you're buying a truck, put some money away for that COI. And what was your second question?
And the second question is, what if the person says, no, it's okay, it's just going to be staying there? Do you need to have the full coverage, like physical, let's say liability, or physical is enough?
If your haul is going to provide you, let's say they're hauling for Landstar, and Landstar is going to provide them a physical damage policy, they need to have at least a bobtail policy. Okay. So, and it needs to be until that the haul is able to take that policy on and send it over to the lender. Majority of the time, the lender is going to require some type of haul source verification, whether you're running under load boards or hauling for a certain carrier. They're gonna need an MC number majority of the time to do a loan, just to make sure that you have an active SAFE or an active Secretary of State if it's under a business name.
Okay. Do you guys check the safety ratings, or as long as the MC is active, you don't really pay attention to the safety of the carrier?
The KC Financial does not check that. Our lenders will do that. Yes. And there's certain times where I'll be like, oh, this customer qualifies for this lender. Their rate's going to be magnificent, and it's a soft inquiry. I'm like, hey, can you just take a peek at this? Let me know what you think. They're like, oh, their safety's not good enough. And I'm like, okay, I'll talk to the customer. I'm like, hey, I have this option for you. And this is before I run their credit with a hard pull. And I'm like, this is the option that we have. Is this something that's going to work for you? So certain lenders do look at that. Others don't. It just depends on how they lend and what they lend on.
So do they certainly look at the driver performance, like driver, let's say, speeding tickets, or they look on how they take care of equipment and violations on equipment? What are they really looking for? Or you're not that familiar with the?
They'll do public record searches, but they only find bad stuff like you tax evasion for 2 years. They don't really care about speeding tickets and parking tickets.
Okay.
If your truck gets in an accident and you're currently in a lawsuit with an insurance company and someone else, they're gonna see that and probably shut it down until that is taken care of.
Okay. And again, one question from one of my students again. what credit score should be to be approved. And we already stated that even with 500 credit score, you guys can give an option if person has a down payment. Any other things that you think that people need to know before they gonna contact you? Like, how do you guys, like, because we're gonna have the link and they can, we, since we affiliates with you, we're gonna send you some business. So what is the best way to contact you? Is it best way to email you? Is it best way to call you? Is it best way to go to our link? How fast is Kyle personally responding?
I respond to my emails immediately most of the time. I'm on the phone quite often, majority of my day actually. So I'm available by phone or text all the time. I just might be in the other line. So if you shoot me a text or an email, I'm going to see that while I'm talking to someone else, and I'm going to be able to answer your questions or at least get back to you and say, hey, let me call you right back.
Okay. And if they go on your website, right, you guys have contact, so they can put apply today, they can put their name, they can put their email, and they can get started. They can go also through our affiliate link, right? And you guys gonna respond to them. Well, I see you have few more other people working for you. Is this your salespeople? Is this is your like team? Or I mean, who else is running KC Financial?
So Leah is our funding manager. She takes care of most of the loan documents, the steps to fund a loan, down payments, type of insurance certificates. Zach's another sales representative we have on staff that does financing as well. And then Derek and I are the managing partners that, do majority of the financing for KC Financial.
Okay.
But just to clear something up, when you do go to the website and you click apply now and you put your information in, you're not actually filling out a credit app and submitting consent to get your credit run. That's something we're going to have to do when we call you and make contact and say, hey, we got your submission. We'd love to talk to you about what your situation, and then if everything goes well and you want to move forward, then we'll send you a DocuSign that you can fill out to give us consent to look at your credit and help you get your financing.
Yeah, well, that's a good clarification, because a lot of people gonna be afraid. They're gonna say, "Well, are you pulling?" Well, first, you cannot really do that without what? Without having their social security, their tax ID. But a lot of people are afraid of putting information because, of course, maybe you know what? Maybe you should add here. This is not an actually real application. This is just a way for us to contact you, right?
Yeah, exactly. And some customers will be like, I applied 2 weeks ago and I didn't get an approval yet. And I'm like, well, we've called you, we've tried to get your credit application, but we were unsuccessful with our attempts. You didn't actually apply. You just kind of gave us, the right to contact you and let us know you're interested.
Okay. So let me talk about competition. How confident you are that KC Financial can give better solutions and better business than other people? Is that competitive business? Do you have a lot of companies who try to provide financing nowadays?
Absolutely. Every industry, there's, competitors, and we're structured in a way that we have access to majority of the biggest lenders in the industry. So if there's a rate to be had for a customer, we're going to get it. And if they have an approval with a bank that we don't work with, we're going to sign them up, and we're going to, get that opportunity to help our future customers, give them that same opportunity. Even if we lose that deal and that customer goes with that financing, we're still going to take matters into our hands to try to work with them so we can offer that to customers in the future. Because at the end of the day, we want to make sure the customers are financially stable so that way they can grow their business. They come back to us. And even if that's just us helping them find equipment with one of our dealerships, that's wonderful. And if we lose a deal to another lender, we're going to try to work with them so that way we can use that to help other customers.
Is that going to help you like in a year or two when you have the book of business, like in any business, when you have more customers, to get better lenders, better deals?
We've actually leveraged a lot of our relationships with our customer base. Yes. I
Okay.
mean, a lot of banks like, oh, we want volume. Well, here's volume, and then they like, okay, we'll work with you. And it's very strategic, but at the end of the day, it works for both parties. The lender gets that their deals, and the customers get their better rates because those lenders are harder to work with. And so the harder the lender is to work with, typically they offer the best financing for a
Okay.
customer.
So let's talk about the kind of sad part of this industry. Let's say somebody bought the truck, they finance, and it's not you who is going to repossess the truck, but what is going on right now in trucking. For example, how many payments you have to miss, or how does this process even works nowadays? Because again, when I started the business, it was a different game. Nowadays, everything is switching. So how does this happen? So let's say somebody cannot make payments, and they are not willing to give up equipment. They keep driving. So what is the time nowadays when the bank is actually gonna hire? Probably, what do they do? Do they hire the special team to locate, or they gonna contact the client first? How does it happening nowadays?
So first, KC Financial, hopefully with a good relationship with the customer is going to say, "Hey, I'm in a bad situation," and we're going to, take matters into our hands with our lender and be like, "Hey, can we get a deferment on payment, 30 days, 90 days? It's the winter time. He's, doing gravel. It's a hard time for his dump truck. Can we get, 60 days leeway?" And if they're like, "Yes, we can do that," or if they're like, "No, we can't do that," they will take matters into their hands with their repossession team. That's not something KC Financial does.
Okay.
But we're always going to take the initiative to try to help our customer get that payment delayed or help
Mm-hmm.
them lower that payment for those slow months so that way we can keep them happy and keep them financially stable.
But let's say, so you tried, you did not succeed. So I mean, realistically, so how long does it take for bank to go get that equipment back?
I would say realistically, if you miss 2 payments, they're going to be contacting you a lot and trying to get their truck back.
So probably within 90 days, right? If you
Yeah.
don't really answer, if you don't want to cooperate, if you don't look at other options.
If,
Okay.
if the customer's really trying to pay back their loan, most lenders will try to work with you because no one wants a repossession on their books. But if you're unresponsive and you're not paying for 90 days, there's probably someone coming to get that because most of the time there's a GPS installed.
Okay. So is the GPS installed? Is it a requirement of the bank, or they do it without customer knowing that?
It's always disclosed to the customer. They have to sign off on it on the loan docs that they know that there's a GPS installed. And it just depends on the bank. Some lenders require it, some don't. It just depends on what they do what their practice is on their end.
So tell us the reality. We're now in April. 2023 started very not a good looking year for trucking. Do you see a lot of people who actually struggling, who bought the trucks in 2022, maybe 2021, or they kind of still trying to make it in this industry? Or do you see a lot of people who trying to give up, or just I mean, what do you see as a highlights of reality right now as a April May coming up? Because when I look at the rates, well, we still another 20% down for April. May is not looking good. Seasonal produce is not really going to change much, so that's why people have to be realistic. So do you see a lot of people who are getting out of the business or not?
We see every day customers that bought at the wrong time and they're upside down on their loan and they're trying to get us to refinance so that way they can lower their payment because their payment's too high. And we're always trying to help. There's a lot of customers in today's market that, they didn't finance their truck. They paid for it in cash and now they need that cash flow. So they're asking us to refinance it and give up their title as collateral to the lender so that way they can have that cash back in their pocket and they can weather the storm because freight's down. I mean, it's down. And there's a lot of customers that might potentially just be breaking even at this point just to, make ends meet. And there's a lot of opportunity for you there and for your personal life. If you have, something happen, if you paid your truck in cash to get some of that cash flow back. And that's very prevalent in today's market. A lot of our customers are doing that.
Okay, so you go and refinance paid off equipment. So that's good to know. Not too many people like to do that because again, this is trucking, not stable. So you still can get that cash out to survive because a lot of people they don't want to give up. They don't want to close their MC. They just need extra cash to
Yeah, within reason. If you come with a 1999 truck and you want 45, 50 grand cash, there's a really likelihood of you getting that's very slim. It's probably zero, to be honest. If you have a 2017 Freightliner Cascadia that you have paid off and you just want 30 grand for it, there's a lot of lenders that are just gonna be like, as long as your credit fits their parameters, they're gonna go ahead and lend on that.
Well, Kyle, it's have been a pleasure. You answer all our questions, and we are glad that we have an opportunity, hopefully, to be a good affiliate for you and help our students and our future business owners of trucking. So, tell me the last part. What is your personal goal for KC Financial? what are you aiming for? What are we talking about? You wanted to start selling 500 trucks a month? You want to become a $1 billion company? What is your personal goal? Because we always inspire people. As you told me, you grew up. Tell your story. Why did you grow up in a rich family?
No, I grew up where we had two-bedroom house, five siblings, two parents, one bathroom, four sisters, so one bathroom kind of sucks. And a lot of the time we didn't have electric, and there was times where food was scarce, and it was we did our best to say the least.
So, can you give that inspirational quote for the younger generation, for people who even maybe my age, but kind of feel sometimes the pressure? Is there something you want to tell people so they can look up to and say, "Look, I heard that Kyle, and he told me that I can still do it and I can go to my goals." Is there something like what was keep motivating you? Because look at you, handsome guy who owns his own company. Look, the one way. How old are you? I mean, you what how old are you?
28.
28. So you are a really young kid who already achieved so much. So what is that motivational quote you're going to give to our viewers? Because we are big on educating, empowering, and telling people that it is possible.
The only thing that I can say that drove me to success was don't let anyone tell you you can't do something. There was a lot of people that I confided in and said, I want to start a brokerage. I think I can do this on my own. Every single person besides Derek said, you can't do that. You can't have success. It's too hard. And it's hard. It's very hard to run your own business and be successful, but don't let anyone tell you you can't do that. If you go out there and you try and it doesn't work out, it doesn't work out, but don't just go try. I
Just
mean,
go.
that's all
And
I can say.
And I think when you do mistakes, that means that you tried and you learning something. Since we just mentioned Derek, a lot of people debate when they go into the business. I went through a lot of businesses and I learned my lesson. It's hard to have partners. So tell me honestly, is that easy to have Derek? And we know that you friends, and I know that he's probably gonna be watching there. Let's be honest. Is that easy to have partner in this business, or sometimes it's make it harder because people look at things differently. People have different work ethics. So in your case, is it easy relationship, or is it something which sometimes is challenging? And just be honest. Derek, Derek,
Meeting Derek.
Derek is not gonna Derek is not gonna fire you because you are the owner too, so you don't have to be afraid.
The honest answer is Derek was he's the best partner I could have ever asked for. We hear a lot of war stories with financing where hey, my business partner screwed me over, stuff like that, and we have such trust in each other and the capabilities we have as separately and together. It's just an amazing partnership. And to be honest, my girlfriend gets mad I talk to him more than I talk to her probably. So it's just communication, and we have great communication, and it's amazing, and we have great partnership, and we both trust each other, and that's what we're here for.
So with a workflow, do you guys kind of one is better maybe in sales with the lenders, one is better with customers, or you kind of guys do the same stuff together? Because like somebody can be a better person who can get better deals with lenders, but somebody's better with customers. For example, maybe you don't have as much patience. I mean, I'm just giving an example. Or you guys kind of split.
I would say my strengths with my education is I'm very fine tuned with financing and numbers, and I know I'm going to get the customer the best absolute rate I can get them as long as we have access to that lender. Derek is a very good customer relationship person and public speaker, and so the fact that I'm on here tonight is kind of hysterical, but that's our strengths and our weaknesses. I have a weakness in public speaking, but communication with customers,
I don't see any weaknesses right there. You're doing great. Plus, look, again, I am direct. It's something new. And you came up on this because, I mean, we know that Derek is getting better. But we're gonna see him. We'll bring you both back because, guys, I can tell you this: if we're gonna send you the referrals, and I'm gonna hear the bad feedback from them, I'll bring you back to this, and I'm gonna say, well, if I recommend you, I will also give you a good reputation, or I will destroy you as well because I am sending you my best students, my people who trust in my wording. So make sure when they come from me, you go that extra mile because Alex will fly to Kansas City. It's not gonna be a pleasant catch-up lunch. Just
Yeah,
joking.
I hope KC Financial goes the extra mile for everyone. But
I hope so too. Well, again, Kyle, very pleased to meet you in person. And hopefully, you guys get lots of referrals. Again, our links are going to be under the video. It's already on Facebook, it's going to be on TikToks. And we're going to have that link everywhere for our classes. Again, enjoy your evening and say, Derek, that he's the next one. Probably we're going to do
yeah,
we're gonna do another live and we're gonna look at reality maybe in July because few months in a trucking can change strategies and financing. Thanks
absolutely.
again.
Thank you so much.
Thank you. Bye. And again, guys, as I told you, we bring the reality of the trucking. I will answer a few more questions if you guys have them after a really, really, really short video of me playing that chess, right? You know that you have to be a pro. What is the difference between pro dispatcher and a desperate dispatcher? Well, logical thinking, strong foundation, knowledge of the markets, equipment, negotiating skills, and of course, ability to put all of this together. Good pro dispatcher is like a chess player. We know when to say yes, when to say no, when to close the deal, and when to make a profit. Sign up for my class and never ever be a desperate dispatcher. Well, guys, and I am back and I'm so glad to see you. We are starting our next class on April 29th. And for the next 5 days, we're going to have the spring sale, which is going to give you $100 off for our dispatch training. We know that times are tough for some of you. So when you're going to go to our website, guys, when you click on the classes, and hopefully you guys like our updated website, when you guys gonna click on enroll and you guys gonna answer all of the questions, you can put the coupon there, right? So this is going to be spring sale. That's all you have to put is a spring sale. Also, guys, finally, we are getting to our mentoring. It's already on sale. I am announcing it for you guys right now. So make sure, because it is a limited amount of people who will be in our mentoring. This is, you know what? This is, hopefully you guys were hearing me, right? I don't know if you were hearing me or not. So this is 3 months. So 90 days success program. You can save money 20% and pay up front, or it's going to be $199 per month. This is a date. This is our topics. And of course, besides all the topics, it's going to be assignments, homeworks. The mentorship is going to take place on Wednesday nights from 7 p.m. to 9:30 p.m. Central Time. 2.5 hours twice a month. So we're talking about 90 days. We're going to be making sure that you polishing your skills. We're going to talk about onboarding. We're going to making sure that you becoming a pro. One more time, if you're still looking to sign up for April class, make sure you put the spring sale to receive $100 off. I'm glad to see you. Hopefully you guys all doing well. And of course, we are changing trucking for better. Love you guys and see you in my classes.
changing the world. Standing in the street, can you hear me? Wake up from your sleep, come stand with me. This is our time, we're changing the world. We won't back down this time around. In every city, in every town. Whoa, we're changing the world.